And welcome to another one of my videos. Firstly, I do wish to apologise about not putting the podcast out on Friday. I've been absolutely run ragged and I just needed some time to myself. I do really appreciate the people that came on board. There's still a couple of people that need to contact me about the giveaway, so if people want to email me at the email I provided, then please get in touch with me. It is a giveaway. I do intend on giving them away, but I can't send them to people who haven't given me their address. That is what it is. So yeah, in today's episode of my podcast, by the way, I set the podcast up for people who prefer to listen rather than to watch a video. That's okay, we're all busy people. Sometimes I like to just go walking and to listen rather than watch content myself. So yeah, in today's podcast, we're going to be talking about, or I'm going to be talking about, is gold a barbaric relic? And one of the things that kind of pointed me in this direction is that I hear a lot about the people who either hate gold or the people who love gold. I'm in the middle. I'm not someone who is a gold nut. I'm not a zealot, and equally I'm not someone who just doesn't like it because it doesn't fit in with modern portfolio theory. A lot of the financial experts don't actually like gold, and there are a few reasons for it. They believe that to run an efficient portfolio, you kind of need to have something that pays an income or something that is based around growth, and that bonds will have a better return than of gold. Now, maybe in the past that was the case, but the world is fundamentally a different place than it was 20 years ago, especially in terms of financial systems. For those of you who watch my content will know that I talk a lot about the impacts of excess money in the system. It's not quite scientific. It is factual based, but what I do is more of an art. If you want to go to a science-based channel, I've said it before, but please check out Belang P. He is an absolute master. He has a PhD. He can break down these topics a lot better than I can, but maybe I will get there one day. But also, I'm more, because I'm a coin dealer, we're coming at this problem from a different angle also. So I've got into why some people don't like precious metals. Another reason why that financial advisors don't like precious metals is they don't earn a commission. It's not on the radar if they can't make money from it, which I think is a real shame, because I don't see how you can give professional advice about finances if you don't give a broad spectrum of the products on offer. You should be able to give advice regardless of whether or not it makes you money, but that is what it is. So my argument today of, is gold a relic? I'm just going to go through some charts. So this is the chart. I'm doing it in dollars today. The reason I'm doing it in dollars is because there's more. Well, actually, there's not more comprehensive charts, but because gold is priced in dollars, I think it's a fairer representation. And in terms of arbitrage, gold doesn't really benefit that much from it. There's very few occasions where you can profit, or not in what I do anyway. If you're constantly buying contracts, I guess there's going to be opportunities where you can, but that isn't available to most people. So it's not relevant to most people. So let's have a look at the gold price. You can see that it's had crazy fluctuations. Crazy. It's gone down, it's gone up, it's gone down, very low, it's spiked here. So my argument has always been that the world we live in today is fundamentally run by modern monetary theory, and that the printing of excess capital, well, not the printing, but the inclusion of excess capital into the markets has increased the value of gold amongst other assets. So my core belief is that the more money you put into the system, the more it will find its way into other assets. I'm not saying they will all go up. I'm saying that they will go up and down in an upward motion, but they're going up a lot faster than they were due to this. Now you could say, but Sean, in 1970 this didn't happen. What you're talking about is quantitative easing, which is financial wizardry from the last maybe 12, 15 years. There was different issues in this era. So the United States had chose to come off the Bretton Woods. This is what pushed the price of gold up. Anytime it goes up in a line like this, that's sentiment based. You know, if gold was to go up in an orderly manner year after year, you know that is simply governments putting small amounts of excess money, or small amounts of money into the market. They aim for 2% a year in inflation. They could increase the money supply by 2%. They could do that, and gold would follow suit. This is sentiment driven, and it was a lot of, I wouldn't say speculators, but it was a lot of individuals who were really worried about not only the Vietnam War, but also coming off the gold standard, which is kind of relevant. And then it dropped down. So this is in real terms, by the way. Sorry, it's not in real terms. It's in relative terms. So this is what a dollar would be if it was priced today. And you can see it drops all the way back down. When it goes up like this, you always have to worry. It goes up very quickly over the space of maybe a year or two. So if you look here, it's gone up very quickly over a year or two. It comes down as well. I've never said to anyone that I don't think gold will drop. My notion is that it will rise and fall, but rise in an upward manner. So you're always going to have drops. Are they always going to be as nasty as this? Not necessarily. I don't believe that whatsoever. Again, the world is a very different place in these parts, you know. So in the early 2000s, that's where Brown sold gold at its bottom. And people often say, oh yeah, well, he was wrong. I don't think he was wrong. And I'll explain why. I don't think he was wrong off the back that he sold it to loosen up the financial markets, and to loosen up the financial markets was to be able to increase the money supply and to do things in a more lax fashion. If anything, this rise is probably down to Brown, but it wasn't down to him being wrong. It was kind of a result of the consequences of his actions after selling it. Now, you can see it's gone up again. Like this situation, it's gone up due to people worrying about the value of money. People were worried back then. It's only when you get to here, this is the great crash. I say great crash. I was 18 years old when it happened. I kind of skipped it because I was at university, but I know it caused a lot of suffering. And I know I couldn't get a job once I left university as well. There were still issues. Maybe that was partly down to my CV. Who knows? But it drops back down. And then it creeps again. Now, here's where I've been talking. I think the world is fundamentally a different place from here onwards. I think they put too much money in the system. They've tried to taper the money in the system. I should show you. So here's the United States. They've tried to decrease the money supply. They've had some success. But like I said, it will go up and down in an upward motion. It has to. To decrease it, they'd essentially have to increase the rate of interest. They can't afford to pay it. Now, there's something very interesting that I've been reading up upon from Japan. It's called yield curve control. Maybe the United States is trying to do that. I don't think it's feasible. I've heard many theories, like the dollar milkshake theory. I'm partially a subscriber to that. I think there's some validity in it. I think it's flawed in certain ways that it's over-egging how big the US is potentially. So, for example, the yen, the yuan, the pound, the Swiss franc, the euro, Canadian dollar to some extent, these are all going to have impacts on the US dollar as well. The US dollar doesn't boss all these currencies. It's just not true. So yeah, like you can see the world changing. It's dropped down, and it's rose back up. This is the pandemic. Now the question is, will it break higher? Personally, I think yes. I think it's the end of the beginning and not the beginning of the end in terms of high prices. I think that there's no way they can not put more money into the system. I don't think the virus is done with us. I think it's going to come back with a vengeance. You only have to look at the Spanish flu. That had 3 strains. It lasted 2 years. Is it going to be done with us within the next 6 months? No, it's not. There's already cases of countries flaring up. It's yet to rip through parts of the world. It will come back, and that is the world we live in at the moment, unfortunately. So you can expect the money supply. See here, it's bounced up. It's going to go higher. The US government's already said it's going to throw more at it. Now, that is my opinion, but I don't see any other reason. I tend to scenario plan. The bet is, will the virus last longer? And if the virus lasts longer, will the US or the UK or Europe or any of the major economies, will they let the citizens go to the wall? No, they won't. They won't do it. They're going to have to bring out the printing press. They've got no other choice. So it's either death by 1,000 cuts now, or it's death in the future. It's a very easy solution to kick the can down the road. Now let's have a look at. This is 200 years of the price of gold. It's from a website called Only Gold. I was having a look at it earlier. So this also backs up something that a subscriber was saying on my video. I couldn't quite work out why the $20 gold wasn't an ounce, and this explains why. It says why. So this is where the dollar was pegged. Oh, an ounce of gold was pegged, sorry. So in 1955 it starts moving. You can see that it doesn't really do much here. Look at 60s. There's not much in terms of volatility, in terms of money supply. 1968 goes up a lot. Here's where your worries are at. 43%, 66%, 72%. And then it loses. That's fine. It loses again. 20%, 29%, 120%, 29%, minus 32. This is not a bad pullback. In terms of how much it's grown, it's not a bad pullback whatsoever. But you can see from the charts that when it goes, it goes. Now let's have a look where I think it's gone a bit crazy. So 2007, 2008, 2009, 2010, 2011, 2012. There is some big numbers going there. And then it has a pullback. And then it's got a small pullback and another bit of a small pullback. It's now over 2,000. It only goes up to 2015. But it's now over $2,000 an ounce. Is it going to lose 30%? Yeah. At some point it will. Everything goes in cycles. It's going to lose value at some point. That's how markets work. And when it loses 30% 2 or 3 years in a row, I'll be buying even more. I'll try and sell nearer to the top, and then I will buy more nearer to the bottom. And one of the best strategies you can use is just dollar cost averaging, because if you're buying for 20, 30 years, it doesn't matter anyway. You got the perfect relic of the past to help promote your future self. And that's fine. But is it a relic? Should it be confined to the history? Well, you tell me. If you look at the history books, this relic has saved lots of people from poverty. It's never going to be the be all and end all. It's got this magical property where you have it in hand and it's beautiful, but it's never going to be the be all and end all. But it's got the intrinsic property for it to help look after your wealth. It's not a relic by any stretch, but it doesn't mean you should be 100% in gold, because it will have pullbacks. There is going to be times where you can lose 30% in a year. And these are the people. So it tends to be the dumb money that will bid it up. So if you go back to this chart, the dumb money will buy here, and then they'll buy here, and then they'll wait for it to sell. There's a great chart which shows the feelings and thoughts of an investor. Most people will buy high and sell low, but we know better. Anyway, I'm going to leave it at that. I hope you've taken something from this. It is quite rudimental, but I don't particularly want to go in depth on lots of issues. So that's okay. I just want you to really think about these issues and whether or not they are pertinent to yourself, and whether or not you can use the information to better your own self. So if you do like the content, please like, comment and subscribe. It's been slightly longer than I'd planned, So for those of you who've listened through, I'm really grateful. I'll see you on the next one.